Imagine it's Saturday, you're chilling away from your keyboard, probably spending time with your family or friends, and you exited all your positions. You're not in the market because you know weekends is the time when the price probably not gonna swing too much, and you know that next week, in the upcoming week, in just couple days, FOMC meeting is happening, and Jerome gonna announce are there more rate cuts or they increase the rate, what's going to happen. And you already experienced trader, you already know that it's better not to take any position ahead of big events, ahead of earning reports. FOMC meetings is the big one, or some inflationary data. You already learned it, you burned a couple times that it's better not to do any bets, so you take a step back. And then you decide to open Twitter and X, and you see everywhere everyone is talking about this one big whale who just posted $370 million bet, betting that Bitcoin gonna go down. He's betting all that amount, 370 million, shorting Bitcoin. You can see his whole position on Hyperliquid because it's a decentralized exchange that's on blockchain, and you can see the entry price, liquidation price. You can see the stop losses. Everything is on chain, and you can see when that trade was entered and who entered it. So you can actually observe that wallet. But at this point, you're like thinking, oh my God, what's going to happen? This is definitely an insider on Saturday. Why would someone would put such a risky position? So you jump on Hyperliquid and you decided to study this whale. Let's call him Mr. Parker, like from Spider-Man, because he has a spidey sense. And you will see why it's Mr. Parker. And you start to look, oh, the whale actually posted his take profit very, very low. So the Bitcoin was traded at about $84,000. And the whale placed his stop loss or take profit at 50, at 60. And you're thinking, why is it so low? It's unbelievably, it's hard to believe that the market's gonna go so much lower. We already had that swing and Bitcoin traveled all the way down from 100, and now we're at the 80, and are we actually gonna go into 70s? But the whale, he puts the take profit in the 50s area. So you decided to jump in and study this whale. You open Hyperliquid, you find the wallet, you find the transaction, and you see that the whale actually sets his take profit is super low. It's not even in the 70s, it's in the 60s, it's in the 50s. He actually placed 2 take profit positions. So you start thinking, is there some kind of an insider? And you, of course, you think, it's so good that I jumped on this, or I saw this on Twitter on the weekend when everyone is out, and you decide to follow the whale, copy trade him, and also short, or maybe sell. First you decide to sell all your Bitcoins, and maybe you even think, maybe I should have shorted as well with this, because that insider is definitely knows something. He's maybe one of the Trump's family, because we had so many insider trading with Libra and with Trump coin. So you're thinking, okay, this time they're not gonna get me. I'm gonna sell Bitcoin exactly on weekend, and then on Monday and Tuesday when FOMC comes out and they spike the rate, I'm gonna be profitable. But yet again, you were wrong. Yes, there was some wobble, but Bitcoin never went into 70 and 60 territory. And an emotional trader again took you over, and you forgo all your strategy, everything that you were so convinced about, you now just left behind and just follow this trader, because this sentiment was artificially created. So let's look at exactly what this whale, Mr. Parker, did to make you think this way. Hi, my name is Zhenya, and I'm head of research at EVG Capital and crypto investor since 2017. So it's all started when very big crypto account, Ash Crypto, posted this tweet, breaking someone has opened a Bitcoin short with 332 million with 40x leverage, and the liquidation is 85,300. And they also mentioned about the short squeeze, more about it later. And here's a screenshot from that position. And when we look at it closer, we can see that this whole position for $330 million was opened with only 8.4 million actual dollars on this account. And again, because of the 40x leverage that Hyperliquids allow, they were able to create such massive position. They also could have opened this position on other decentralized exchanges such as DYDX or JMX, but they went for Hyperliquid, And on centralized exchanges, they wouldn't be able to create such massive position because they actually limit how big your position can be. For example, on Bybit, we know there is 125x, but Bybit will not allow you to open such huge position because if the price swings and too fast and they are not fast enough to liquidate you, they will incur losses. So actually on Bybit, they only allow you to use 1.6x for such big positions, and Binance would allow you only 5x. So in this case, the whale chose Hyperliquid because again, it's 40x, it's the highest possible, the biggest leverage that you can use. I'm gonna post the link to this wallet address because again, it's all on chain, and here hyperdash.info, you can actually find the wallet and track all their moves and when they entered the position and any future trades, because after the Bitcoin short, they actually opened Melania long. So link for this wallet will be in the description so you can check yourself for the balance and everything like this. Next, let's look at what was happening with Bitcoin price and why this whale actually decided to short right that moment on Saturday when everyone is out, hanging out, and the volume are super low. So here, that's 84.40. That's where they entered that position. So we see that Bitcoin was going for about 1 day. It was going just sideways in this narrow channel between 84,600 and 83,800. And after the price tried 3 times to exit this area, this 84,800, this was the first attempt, this was the second attempt, and this third attempt failed. That's when they decide to put this massive short position, huge bet. And also on Hyperliquid, we see that their liquidation is only at 85,300. Simply, let's measure. That's 1.5% away. The liquidation, it's not a stop loss. You need to understand. They will close the position if the Bitcoin will increase by 1.5%. It's their whole account, the $9 million that's on their account, whatever it was, gonna be gone, gonna get liquidated. If Bitcoin price increases only by 1.5%. And it's actually, you see, that's the top of this week. So that person saw that the week went all the way here, and I don't know if they calculated back from that price, but that's where their liquidation price was. And they opened this short. After they entered the position, a little bit later, a couple hours later, they opened take profit. And their take profit was so low. It's just a pure comedy in trading. 69,400, that was their first take profit. And then 58,700 was their second take profit. If we zoom out a little bit, let's take a look at why those numbers, right? What's going on in their head? We need to get into their head. We need to learn how those whales are trading. So 69,400, that is the area of previous low. We had this big range. This last year, the whole year, we had this big range. And we know that the price most likely to touch the previous resistance line. So all this area is where there will be big resistance once we arrive there. So that was the first take profit, and we understand why. And then the second take profit was kind of at the bottom of the range, 58,700, but you will actually see what's going to happen with those take profits. And what's interesting is those take profits were actually entered later, like 5-7 hours later after the actual position was opened. And my suspicion is the whale actually saw how much buzz in the news he's creating with that, because that was just, no one does that on the weekend. Low liquidity, FOMC is coming. This is just, your mind immediately goes into conspiracy. Oh my God, they know something. I should jump on this bandwagon and trade with them. So that was the market setup when they entered their position. Another thing that whale experienced in their head once they entered the position is we can actually see the losses that they incurred while they were trading, the paper loss. And we see that from this level, 84.40, when they entered the trade, Bitcoin actually traded in the range, because the Bitcoin, even though he entered that position and it's created a lot of FUD in the market, fear, uncertainty, and doubt, the Bitcoin still continued to trade in the channel. And the price increased from the moment when he entered the position. And the increase was roughly 50, if we take into consideration all the weeks, it was roughly 47, let's take it 50 for simplicity, 50%. And you remember that the liquidation was at 1.4, which basically means that he was in paper loss by $3 million, right? 1.4 gives him complete liquidation. We see that the Bitcoin ranged by 50%, that's a third of 1.4, third of his account, 9 mil minus 3 mil. He saw, as he was sitting, as he was like this Saturday night when everyone is chilling and enjoying their life, he's like full ported 9 mil, shorted, and he's looking how it's just being gone. 3 million is gone. He's looking at his account and it's 6 million. And he continues sitting in that position. And Bitcoin just continue ranging. And you see there was a dip here and he was profitable just a little bit. It went down by 0.35%, not even a 1%. That's when he was profitable, a little bit profitable, and then zoop, it back to the range. So a trader would look at that. Imagine if that was your trade. You would see there is no strength. Bears are not that strong. Bulls are in power, and they just continue bringing back the price. The take profits are so far away, and the stop loss, there was no stop loss. It was just a liquidation stop. So that's what was happening as he was staring at his position. Let's again try to get into the head of this trader. So he chooses Saturday, when liquidity is low, institutions are not trading, big whales are not trading. So Bitcoin actually price goes within a tighter range, and it actually creates opportunities if you have a big enough wallet, big enough portfolio, because it's easier to steer the price into certain direction if you can afford it, of course. Because again, liquidity is lower. If you can affect the price, then you'll be able to push the price into certain direction, which works for most of us, which work for small coins with a smaller market cap and small volume. But in this case, this person, Mr. Parker, was gambling with $370 million. You can buy companies for this much money. Assuming that this whale is professional, he probably looked at liquidation heat maps, and let's take a look at them, what they saw. And here I took a screenshot at that moment when they placed that trade. And we can see that there was this big chunk of liquidity building up, right? So they haven't seen this trend down, but you can probably guess, even without looking at the heat maps. When you look at the chart like this, whenever the price is under the support line, that's where the liquidation will be building up. Because once the price goes into this area, liquidity is gone. And where it hasn't been, that's where liquidity is. That's simple. So we can draw the support line right here, and that's where everything under this line will be liquidity. So if you want to short and you're trying to move the market, if you're at that level, that stage, you actually don't need to push the price this much. You only need to push it to this area so you can trigger those sale orders, so you can grab that liquidity. And once you're there, a bunch of stop orders will start working, stop orders for those who are trying to get long, and that will push the price actually lower because stop losses will be triggered, people will be selling. So they needed to trigger or push the price only by 0.5%, and they would unlock all that liquidity that was under the previous support level. And you can see that eventually they actually got there. So this is how market makers, this is how whales are thinking, is not how we're going to arrive there, but rather where is the liquidity? And once they're there, it becomes much easier. It becomes much cheaper to move the price lower and lower. And that wasn't all. After the initial short, this whale puts more money, 1.2 million they put with 40x leverage, which total is 50 million. And then they put another $750,000. What a pennies. You swinging around 9 million and then you throw 750K. What was that? Was that like some change? He just scrubbed in his pockets and found some couple thousands? But again, 40x, so he basically increased it by 80 million. So now his position is 400. Maybe he was just trying to get to the nice round number. The downside of Hyperliquid and trading on chain is that everyone can see your liquidation price. So it was obvious on the right here, it says liquidation at 85,300. The whole internet sees that. And there was a attempt to create a short squeeze. The user CBB, he posted that if you're willing to hunt this dude, then we will take him out. Basically, if you see that their liquidation is right here at 85,300, then if you are able to push the price to that level, it will force him to close his short. And closing a short position means buying. So he will have to buy $9 million because those money will be gone, right? So they will have to buy $9 million worth of Bitcoin, which will definitely be an uptick. And we know that above this area, above this whole area, that's where the liquidity is, right? Because the price haven't gone to that area. That's where the longs are putting, that's where all the shorts have their short stop losses. And it will trigger a massive, massive wave of buy orders because all their short position will be closed. So if the price is pushed in that area, we will usually, in general, just not even in this case, but we will see a huge green candle in this area where the liquidity is. And for those of you who've been in trading long enough, just 5 years ago, in the beginning of the pandemic, there was a user on Reddit with the nickname Roaring Kitty that created short squeeze for GameStop. And they did that with leveraging Wall Street Bets community. There's a big short on GameStop because no one believes in GameStop. It's you know what it is. It's a store where they sell actual games. Everyone's already downloading games from Steam, and hedge funds rightfully wanted to short that stock, so they created huge short position. And Roaring Kitty, he found, I'm not sure, I don't remember his name. I don't know his name. And he found that huge short position and he rallied people around and they basically created a short squeeze, just pushing the price to a certain level where all those hedge funds had to close their short position, creating a big buy pressure, and the price went up and a lot of people were made millionaires from. And that's where the meme stocks term came out. Now we have meme coins, but meme stocks were also created in that moment. And CBB was actually successful with getting people to push the price into the direction. Look at that. Just some group of people on Saturday night, just from Twitter, they were able to push the price of Bitcoin all the way to 85,100. All that whole week, this week of this scandal was created artificially just by crypto community. And they pushed the price of Bitcoin by 3.32%. That's actually amazing how they were able to do that. They definitely used a lot of leverage, but can you imagine just convincing your friend, like those were $1 million bets, and you need to use leverage on that, which means you're increasing your risk. The chances of getting liquidated is so high. And for those who placed their bets in this area, you can see that this week eventually it traced back to this area. I hope that they were able to close their position because there were people liquidated in this attempt to get the guy to short squeeze. And they didn't get just a small change, $166. If they were able to get, that would be a short squeeze. But our whale, Mr. Parker, wasn't that stupid. And he's also online. He's observing what's happening out there. And he knew that there is this big attempt, which is artificial. That's the key. It's artificial, which means he hasn't lost yet. He just needs to make sure that he's not getting liquidated. And in this case, how not to get liquidated is to deposit more money on your account. You not necessarily need to continue opening or increasing your short position, just deposit more money on your account so that your liquidation price moves. Super risky, because what if in the moment, remember, they don't see this whole chart. this is what they see. The price went down again, but then it recovered. It went back to the previous range. And if the move was stronger and if they were able to push higher, there's a big chance that they were able to turn the market, because again, it's weekend, it's low liquidity. Bitcoin, the price doesn't know where it's going. And if these artificial forces are being created, it's actually likely that who knows who will jump on this trend. Maybe the public, the retail, will jump on the bullish trend, or maybe on the bearish trend. So very risky, but our whale deposits $5 million. So they had already $9 million on their account. They just casually throw in another 5 milli into their account, increasing their liquidation price to 85,940. Very small difference, but enough for him to be secured. He's not getting liquidated. So now he's risking if the price goes to 85,940, which is not that far from the point where they put the position. It's just 2.30% away from where they entered the position, but they are just certain about it. And everyone is like, oh my God, this, it's Jerome Powell himself posting it right before he increases the rate and the Bitcoin price just collapses. This is the point where our whale will get liquidated. They risking already 9 mil plus 5, $14 million they're risking. And look where the transfer of 5 million is coming from. It came from Arbitrum, and it's very important. It's not very important, but it's a little clue that you will see why it's interesting. It came from Arbitrum, 5 million, and that's increased their liquidation price. And just 2 days after creating the position, they created on Saturday evening, and in 2 days, it was Tuesday. It was Tuesday evening. The whale closes their position. And did they wait until the price went down to 70,000? No, they didn't. Did they wait until it went to 58,000? No, they didn't. They simply closed it when the price went down by 3.20%. And that was the swing once, twice, goes back. Still, the whale is not faded, and he closes the position right in this area where Bitcoin starts to moving lower and lower. And that was $9 million profit, because they closed it and they had $400 million. The total position is huge leverage, super risky, but risked 9 million, earned 9 million, 100% profit in 2 days. Everyone was like, oh my God, this is such a smart move. It's a great trader, and actually it is a smart move and it is a great trader, but that's not the end of the story, because later ZachXBT started to investigate who would make such bold and risky moves. And let's find out who was actually standing behind it, because all the facts hint at a specific person, happens to be last name Mr. Parker. ZachXBT investigation led him to someone called Alistair Pacover. Later, that person changed their name to William Parker. And because it's blockchain, again, everything is actually visible. People think that because it's crypto that they'll be able to hide their movement of their money. Actually, that is not correct. Everything is visible. And Zach simply takes the wallet, the hyperliquid wallet, and traces what other sources of money was funding that wallet, where the money was coming from what kind of other wallets. And then he finds that this wallet, the hyperliquid wallet, was used as a piggy bank for phishing websites. So there was another Twitter account that posted tweets with links to phishing websites that were impersonating other websites relative to crypto. People would click on them and they will get the virus and their money will be gone. And those money will be deposited to this hyperliquid account. Another clue that Zach found is that hyperliquid account was used to sign a Twitter message. What does that mean? Is sometimes when someone wants to prove that their anonymous Twitter account belongs to a specific wallet on chain, because those things are separate, they can sign a crypto message, they can sign a crypto transaction with a message and include their Twitter handle. And that's what Alistair Pacover did. He basically linked his hyperliquid wallet he used to sign a crypto message, the Twitter message. And then now we can investigate the Twitter account, right? And on that Twitter account, this person was bragging about making another $10 million just a weekend prior. Just this whole thing happened on Saturday. Just a week before, on another Saturday, right before Trump announced strategic crypto reserves, there was another bet, and that time it was a long position for Bitcoin from that account, but not from the right before Donald Trump announced creation of strategic crypto reserves, and we had a small pump, and he actually entered a long position, super leveraged, and he made another $10 million just a weekend prior of this whole Bitcoin shorting. And for that, he didn't use Hyperliquid, he used GMX, another decentralized crypto exchange. And what's interesting is GMX is actually built on Arbitrum, and that gives us a clue of this $5 million addition that he had to increase his liquidation price. You remember, it said Arbitrum. And my suspicion is those $5 million actually came from the GMX account where he had 10 million profit. So let's look at his finances. We don't know all of the wallets that he has, but he has 9 mil in his Hyperliquid that allows him to create initial 320 million short, and then he had another 10 million GMX. So he actually was, managing he wasn't putting a full portfolio on at risk. He actually put a half of his portfolio, 10 mil here, 10 mil there. And then when he was at risk of getting short squeezed, he transfers 5 mil, leaves another 5 mil there. And that is just shows you and gets you into his mind what was happening. So how Zach was able to link all those accounts, all those wallets to William, aka Alistair, is now we have two crypto wallets, GMX and Hyperliquid, and then what you can do is you can go and you have Twitter handle, and then what you can do is you can see how often this Twitter handle was changed, what was the previous names, and that allows Zach to go and find Twitter groups for GMX support where you have the same account with the same nicknames posting some questions. That account was later, of course, deleted, and that allows him to trace it and ask in a community, and someone comes out and says that they actually received and paid money, because again, everything on the blockchain is traceable. You can see where the money went to what addresses. So then you can ask the owners of those addresses, if it's different entities, who you received this money from. And someone comes out and they say, yes, actually I received money from this Hyperliquid account. And Zach then asks, oh, maybe you have a phone number of this person who sent you money for for the whatever services they asked for you to do. And they're like, yeah, of course, here's the phone number. So the phone number comes out as this British phone number, which was once registered for someone called Alistair Pacover. And then Zach did a quick search, who is that person? And he found this 36-year-old British national who was charged for other credit card theft just in 2010. At the age of 21, he was already sentenced for stealing credit cards. And you don't need to be Sherlock Holmes here to think, okay, if the person had some problems with the law in the past, there is a very big chance. Remember that there was phishing websites, so it's a little bit scammy, okay? And then there are these credit cards, stolen credit cards, and then we have this huge position opened. And is it some smart whale, or is it someone who is just gambling, putting their full portfolio, finding the biggest leverage where they can? And of course, mine personally wants to go into this scenario that this person is just degenerate gambler. He likes risk. He likes to put huge positions. And in this case, that worked out. That's worked out actually twice. So even though this, aside the moral and ethics of William, but he's actually a really good trader. He put his position on Saturday. He knew that the liquidity is super low. He knew that everyone gonna see his huge bet, and that was his plan all along. That to create that FUD, that, oh my God, this is an insider, and move the market. And he successfully did it by 3%. That allowed him to make 100% his portfolio. And those type of lessons, that's where you can learn how those big whales operate. So final thoughts, what can we learn from this story of Alistair Pacover is that it doesn't matter who is standing behind the trade. Is it institutional money? Is it stolen money? Is it some organized crime and cartels or North Korean Lazarus group? It doesn't matter. What matters is the narratives. What is the narrative right now? And the difference between retail and whales, crypto whales, is that crypto whales can create that narrative. One big short before the FOMC, your mind immediately goes into the conclusions. They know something. It means it's more certain. Everyone starts selling. Everyone starts shorting. The short squeeze attempt is not successful. All this selling pressure, boom, narrative is created over the weekend. And while you expecting for FOMC results because you think that would be the catalyst, no, the catalyst already happened. Placing that position, placing that bet, it was the catalyst. All the money were made the moment when you realized about the story. If you find some story on Twitter or in some, God forbid, Yahoo News, finance, that means the trade already happened. And that is how whales consistently make money because they are able to create the narrative. The other lesson that we can take here is when the price is moving in a tight range, sideways action, it's actually easier to hunt your stop losses. And that is absolutely where the whales are, that's their playground. Because you would look at the chart and you would see pretty clear range. You would see the resistance, you would draw those fancy lines and thinking that, okay, market gonna bounce from this resistance, market gonna bounce from that support line, and you will put your stop losses right below the support line and right above the resistance. But the whales, they know, they see that, they see the liquidity, they see the heat maps, and they would hunt your stop loss, and it appears to you like, oh, your stop losses got hunted. And some market maker like Wintermute or Jump Street, they know something, they collide together with Binance and they just go there. No, you look at the chart, it's obvious where all the stop losses will be, and it's enough to put the wick just exactly where you stop loss because it's a little bit higher than the resistance lines, a little bit lower than the support line. And when market is ranging, you need to be very careful because again, the whales, they know that if they create a narrative, they will be able to move the price from upper bound of the range to the lower bound of the range. And William Parker created this whole narrative in this short span of right before the FOMC. By the way, he closed the position before the FOMC meeting. So that shows you how smart and experienced he as a trader. And you can just learn from all of that, giving the on-chain data and giving the chart price. Next lesson is the publicity of on-chain trading. So the way we trade completely changed crypto versus traditional finance. In traditional finance, you would never know that some hedge fund placed a bet. Only at the end of the quarter, they might reveal, some Nancy Pelosi reveals, oh, my husband placed $60 million worth of calls on NVIDIA. On-chain, everything is right there, happening right this moment. And that information is part of the news cycle. So if you see that there is a trade placed, that is not a signal. That's everything already played out. It's part of the news cycle. So who knows what stands behind this trade? The whale or whoever placed a trade that's supposed to make news, in this case, it made news that Bitcoin gonna collapse. Maybe they have another wallet. Most likely they have another wallet on another chain, centralized, on another exchange, centralized or decentralized. And maybe they already taken profit from the moves that are being created with the news. So you can they could have created a short position, and then on a different exchange, they will create a long position, and then they would be profiting each time the price goes between those channels. So the lesson here is that everything that's on chain is part of the news cycle, and don't think that it's some kind of a signal. That's why the good lesson from Memecoin trading actually is that you do not copy other influencers' wallets, because if you will put your smart little Telegram algorithms and trackers, Trojan, you set it up and you have a nice list of influencers and you're thinking, oh my God, I will be so fast. I will pay a bigger bribe to get exactly after this influencer bought their coin, but you will be the exit liquidity, because if those wallets are known, if they leaked into the public, that's it. Assume that everyone's know those wallets. And if there would be enough people just copy trading after they place the trade, the creator of that trade will close against you. They will sell to you. So they bought at certain moment, you come in, you see that you start buying after them. The price started to increase because you're buying, right? All the followers, all the copy traders starts following the creator of the position. Boom, they see the price increase, they can close that position. That's easy money. All the time they can just create again and again and just make easy money for them. So that's the lesson. Don't copy trade, and everything that's on chain is part of the new cycle. Next is the take profit. Remember, the whale, Mr. Parker, he said he's take profit all the way in the 70 area. 69,400 was the first one, and 58,700 was the second take profit position. That wasn't an intention that the price is gonna go there. He knew that he will be in the spotlight. Everyone's going to see, and that's why it took him 4 or 6 hours before he posted those take profit position, because he saw how much FUD is he creating, and he posted those levels exactly where, if you know TA, that's where you would assume the price would actually go. So you would think, oh, that's an insider and he's experienced and it's a Wintermute, and they know what they're doing, and that's logical, those take profits level. So he placed them. It was part of the narrative. He created it. He played it very, very well. And lastly, just think how he was managing his money. He had 9 million in his wallet on Hyperliquid. He placed a short, and then later on he puts more money, 1.2 million, and then he puts another 750k, all with the leverage. But he continues, so he didn't put his whole wallet into the position and then leveraged it. He had a little bit on the side. In addition, when the short squeeze attempt was happening, he had another 10 mil stashed. So imagine his portfolio was 100%. He used 50%, less than 50%, 45, 47% to create the position, and then the rest 3%, to make it 50, he used to increase his position. But then when the short squeeze attempt, he was still 5 mil to increase his liquidation point, and that worked out really well. He held through all the paper loss that he was incurring. Remember, he was minus 30% on his whole portfolio. He was losing $3 million in the moment when the price of Bitcoin wasn't moving in his direction. But with proper management of his cash, of his full portfolio, he was able to get to exactly where he wanted, making 10 mil on the GMX, making 10 mil here. And then if you look at the wallet on Hyperliquid, he just withdrew all that money, and who knows what would be his next move. He just can create another wallet and will be not linked to this one and continue gambling with all that money, or he can just retire. It's $20 million he has now. So there you have it. This was the story of Alistair Packover. Do not support his scam activities and phishing websites, but really good trader, really played the market, played crypto Twitter, played the whole narrative, knew what he was doing, created FUD, and overall made huge profit. You can learn from him if you have $9 million to swing around. Actually, you need to have $20 million to swing around. Remember, 10 there, 10 here, just to have some buffer. So if you like this video and you would want to see more investigations like this, like and subscribe, and keep an eye on our next video that we are preparing. It would be about market makers and how they actually manipulating the market. Today we were looking at this case of crypto whale, but there are participants, market makers, who are constantly in the market and they affect the price. So until the next video.